All right, let's get started. Today is Friday, September 12th, 2025. Let's take a look at the market and see what's happening today. The E-mini S&Ps are up by 0.09%, with the VIX futures down by 1.11%. Tesla is up by a whopping 7.19%. Microsoft is up 2%. Apple's up 1.53%, with the Q's up 0.5%. Amazon is down nearly 1%, with IWM coming in at about 0.68% down. All right, let's take a look at our activity tab to see what we had close, or if we had anything close since our last episode together. Looking here at BABA being the last trade, we traded that one together in yesterday's episode. So we'll go back over to the positions tab. We'll make sure it's sorted alphabetically, and we'll take a look at any positions that have legs in the money. So let's take a look at CMG here, Chipotle Mexican Grill. We have a vertical short put spread that has been our problem child for a little while now. And it looks like we're trading at 38.65. Let's go take a look at the chart. We're kind of hovering this last 3 days in this area. So nothing really groundbreaking happening there. We do want this to come back to our zone. We are at, let's call it maybe 3/4 of the way to max loss on this. So really nothing for us to do from a management standpoint except for wait for some time to pass, or and just hope for a rally in Chipotle. I doubt if there's an opportunity for us to roll for a credit at this point. We do have this short put hanging out here that we sold a few days ago in hopes of recovering some of the losses from this other trade. So let's go back to the positions tab. We'll take a look at the short put here. We'll go to analysis, and we can see that we are on the good side of this one. We're on the right side of the short put. We just need to let some time pass for us to reach our profit target here. And hopefully Chipotle doesn't tank anymore. It doesn't go down here into the 37 zone or below. Hopefully we get a rally, or we stay right around here. And if that's the case, we should be okay. If it goes down further, then nothing we can really do for the short put spread. But for the short put, the individual short put, we can roll that out in time and collect additional credit. We can adjust our strike if we need to, and if we have the ability to do that, which we should. So let's move on to HUT. We have a short strangle here. We're going to go to the analysis tab. We can see that we are trading well outside of our strikes here. So this one rallied against us, and it rallied again, and then it rallied again, and then it rallied again. So let's go over here and do what we said we would do yesterday and the day before. If it continues to rally, we're just going to go ahead and roll these short puts up a little bit further. So let's, with our short put selected here, we're going to go to roll strikes up. And we'll go over here to the table tab so we can take a look at the deltas. We are at the 21 delta now, and so we can roll it up to neutralize deltas. Let's take a look at positional deltas, what we have. We're at negative 0.46 on the positional deltas. So we go back over here and we roll this up, and let's say we roll up to the 29 strike, which is also 29 delta. That gives us an additional 8 deltas, which means it'll bring this 46 down somewhere into the 38 negative delta range. I'm looking for HUT to come back down. You can see here, even though we have this trend up that's been up since May, actually started in April, we do have some pullbacks here that happen. So we come up, we pull back, we come up, we pull back, we come up, we pull back, up, back, and now we're up. So if we're looking at some kind of a pullback here, we'd be hoping for, something maybe in the 28 range here. So if we go back to the trade, let's pull up the analysis tab again. 28 would be right around in this zone, but we don't know that right now. We have to make decisions based on delta. So let's say it comes back to 30. If we roll up to 29 or 30 and make this a straddle, let's take a look at what that would look like. If we came back to here, we would kind of be in our zone. This thing moves a little bit. You know, it's been down here just below 10 or right around 10 a few months ago. So I'm reluctant to get too much delta neutral on this trade since it is rallying and has rallied quite a bit. So that factors into my decision on whether I want to continue to roll those puts up or not. I think at this stage of the game, I'm okay with either leaving this put at the 27 strike or just rolling it up maybe one more strike. So if we roll it up, let's say one more strike, let's go back to the table tab. We can collect an additional 34 cents and we'll still have a little bit of a zone to work with here. I think I'm okay with that. Yeah, let's go ahead and pull that up to the 25 strike here. So let's cancel this order here. We'll go back to the trade tab and we'll pull that up to the 25, collecting additional 34 cents here on HUT and no impact to buying power whatsoever. Let's go ahead and route that order, send order. It doesn't look like we were filled, so let's go ahead and drop that down to 33, send the order. Not filled, we'll go ahead and drop that down again. Let's drop it down to 32. I'm not going to chase this too far because I want it to be worth it. So I'm not going to go below 31. And we got filled for 31 cents in HUT, rolling our short put up. So just a little housekeeping here. We'll go over to this short strangle. We'll ungroup this one because it's by itself. We'll select both, group it again as a strangle. And then now let's do the calculations to determine where our good till cancel order needs to be. So with both of these legs selected, we're over here in the options chain tab, and we'll just run the math real quick. 110 plus 107 plus 85 plus 57 plus 31 gets us to 390, which is exactly what our average trade price says here. Always run the math because I don't totally trust that average trade price. I've seen it be inaccurate before. So at 390, we'll open up another calculator window here. We remember that our original credit was 110 and we were looking for 50% of that. So we'll multiply that by 0.55 and we'll just take that off of the 390. So 390 minus 0.55 gives us 335, which is our new good till cancel order, or what that should be set at. So we're going to go over here and drop this in 3.35. We'll make that a GTC, good till cancel order, which means that order stays in force until it's filled or canceled. Whereas a day order just is good for the day and then gets dropped automatically. So we'll go ahead and route that order through. We'll go back to our positions tab here, and we can see that we have the mid price is currently trading at 673 on this trade with a limit of 335, and our average trade price is 390. So we've through this rally in HUT, we've every step that we've taken here along the way. The first step was rolling out from the September cycle to the October cycle. We had collected an additional $1.07, and then each additional roll up of the short puts, we have collected additional credits as well. So, all right, so we'll go ahead and leave that one as is. Let's go take a look at the DTE tab. We have all positions currently at 35 DTE, so it puts us about 14 days away from 21 DTE. So in 2 weeks from now on, let's call it the 26th of September, we'll be at 21 DTE and we'll make some decisions and roll some of these out. We do have one here that's sitting at 42 DTE. This was a vertical call spread that we opened in BABA on the weekly by accident, but that's okay. We can manage that one as that one comes up. We look at this column every day, so no big deal. Let's take a look at the IVR tab. We don't have any positions under 20 IVR, so we leave those as is, no decisions to make there. And then we take a look at earnings. And we have Pepsi coming up on October 10th, and CNC and Chipotle following up later in October. So really no decisions for us to make on those right now either. Now let's hop over to the watch list to see if there's any opportunities here for us to open any new trades. We'll go over here to the liquidity star ratings. We'll open it up to 4-star liquidity and turn off 3 stars so that we can just start with the better ones, and then we can go down and look at the 3-star liquidity rated underlyings if we need to. So JD, we have a position open in JD that I think we opened up yesterday. Yeah, we opened up a position yesterday in JD, so nothing we can do there. mRNA, we already have a position that we have open, and we also have seen a position in CNC. LQD never works out for us. Everything else underneath here is red, so we wouldn't even open up any here anyway, but we do have a position already in GDX. Let's go take a look now at the 3-star liquidity rating level. We'll uncheck the 4 stars, see if there's any opportunity here. We have Baidu, which is at the top of the list again. It was there yesterday, I believe. We have an IV rank of 39. So let's go take a look at Baidu and see if there's any opportunity here. We do have a spike, a significant rally here in Baidu. It's passing the north end of that 3 ATR here. So let's go ahead and jump into Baidu and see if there's any opportunities here, possibly to open up a short call vertical and get short Baidu. We'll go out to the 35 day. Let's drop this down to out of the money, and we'll look at the 115, 120 strike here. Has a pop of 57, P50 66 with a buying power effect of 315, collecting $1.85 in credit. Not bad. Let's drop these strikes down a little bit. I'd like to get the pop somewhere in that 68% range, which is a little more to my comfort level. So we have pop 67 with the short the 120 strike, long the 125 strike here in Baidu. Pop 67, P50 77 with a buying power effect of 373, collecting $1.30. We have 10-cent wide bid-ask spreads here on the short call, and then we have 10 cents also wide on the long call. So I think I'd like to route this one. If we go back to the chart, we can see that Baidu is actually down on the day. So that's the only thing that would give me pause on this setup. However, we are really up overall because we gapped up. So let's go back here and let's just pull these down one more strike and see what that gives us. That gives us 89 cents. The P50 comes out to 83, which is, not a lot better than it is with these other strikes at $1.30 credit. So let's go ahead and route this one, see if we can get filled in Baidu for $1.30 or somewhere in that ballpark. Yep, we're filled for $1.30 in a short call in Baidu. So let's go over here to Baidu. Let's select both of these strikes. We're going to group them, automatically group as a vertical. And since this is a brand new position and we're targeting 50%, we can just go here and choose close profit 50%, and we'll choose our good till cancel option here, which is already selected. We're going to target 65 cents on this one for one lot. That equates to $65. All right, let's go back to our watch list, see if there's any other opportunities here. We have GFI. This is an underlying I have not traded before. IV rank is 37.5 with 2.6 million on the volume and a very low correlation to the SPY, 0.19. Not quite as low, though, as Baidu. Look at Baidu as negative 0.02, worth pointing that one out. Let's take a look at the setup here on GFI. Well, before we do that, let's look at the chart and see what it's doing. The GFI is rallying as well. It's had a 3-day rally for a couple of weeks here above the 3 ATR. If I did anything here, it would be to get short GFI. So let's go take a look at how a short call spread stacks up. If we pull these strikes out to, let me pull out to the 40, and let's start $3 wide here. We're only collecting 65 cents. Let's go near strike out of the Monday, $3. We're collecting $1. So we have let's say 10 cent wide bid ask on the short call, and we have 10 cents wide on the long call. The pop of 62, P50 69, buying power effect is 200 even, collecting $1. Yeah, I'd like to route this one. So I'm going to go ahead and route this one. Let's make sure we're in the right cycle. Yeah, we are. 35-day. Go ahead and send that order through GFI. And we're filled in a short call spread in GFI for $1 credit. Let's go over here to GFI. Select both of these legs, group positions as a vertical. We'll select both of them again. Close for profit 50%, just like we did on the last one. Good till cancel 50 cents. This is a one lot, so we're targeting 50 cents, which equates to $50 on a one lot. So we'll go ahead and send that order through here and let that rest. Let's go back to our watch list, see if there's any opportunities for us to get anything else on. We have IREN, which didn't pan out for us before, but let's just take a look at the chart and see what it's doing. It is also rallying here. And let's take a look at the setup on this one. So if we go nearest out of the money, let's go $3 wide. $1.12 buying power effect of 188, pop 60, P50 64. Let's pull this out just a little bit further. We can get very similar setup that we did on the previous trade, but let's go back to the watch list and see what the correlation is to the SPY. This one has a 0.65 correlation to the SPY. It's a little bit more correlated than GFI was. Let's go back to the trade tab here. 64% with a P50 of 68. I'd like to see that P50 a little bit higher. It's very close to the pop. And so I'd like to see that, well, now we're going up into the 70s. Yeah, I'm fine with routing this one. Let's see, maybe if we can get a little bit smaller here. If we go a little closer to the money and get a little bit smaller, that really doesn't help. Let's see here. 35, 38 gives us 102. That's the one we were looking at. We go 36, 39. These strikes are a little bit better. The bid-ask spread is a little bit better on these. 86 with the P50 of 73. What's the P50 on this one? 69. Let's come out here a little bit further. This starts to get a little junky when we get out to the 37 strike. So let's just go back here to the 35, 38 with a P pop of 64, P50 of 70, collecting $1 buying power effect of 199. And we are pegging the top of this one here. All right, so let's go ahead and review and send. We'll send that order. Let's cancel that order rather, because I just realized we did that in the 21 day. Let's go back to set this up. Push it out to the 35 day. Let's reset it up again. So 6, 7, 8, 9, pop 66, P50 73, collecting 85 with a 215 buying power effect. Yeah, that one's, pull this one out a little bit further. We'll do a 4 strike wide. $1.13. Buying power effect 287, pop 67, P50 74. See if we can get a little closer to the money and get a setup that. So we have a pop of 63, P50 71. This is the 35 short strike, 38 long strike, collecting $1. Let's route this one. Review and send. We'll send the order, and we're filled in IREN. For $1. We'll group the strikes as vertical, select both legs, close for profit, 50%, good till cancel, and send the order. All right, we have SOC. We know we can't trade that one. SHOO, not one I've traded before, but I think I'm okay. This one has earnings coming up on 11/6. On these defined risk spreads, I try to stay away from earnings as far as I can, since we don't really have the opportunity to roll those out. All right, well, that's it for today. Just a quick recap. Let's see, we rolled short puts up in HUT. It's tested on the call side. We opened short call spread in Baidu. We opened a short call spread in GFI and a short call spread in IREN. All right, well, that's it for today. Join us again on Monday for another episode of Decay Factor. Thanks for watching.